What's going on, everybody? It's your boy C-Zar, and we are talking about XLM today. Hit that like button, subscribe if you want to see more content like this. Let's get into it, my friends. Here we are on the 18th of February. 10 days, 22 hours left in the month. We're sitting at about 33.38 cents right now. Down about 19% on the month so far, but I think in the next 10 days, 22 hours, you're going to turn that around a little bit. I would suspect that by the end of this month, not only are you green, not only are you not red, but you're probably going to be above these highs. If you're not above these highs, you're going to be very near them. So going into March, I expect that we do break out and see new all-time highs. That should be very apparent. I think that's obvious with this consolidation phase here. I'm going to stop stuttering, I promise, okay? High to low, you have this flat top, kind of a flat area of resistance here with ascending lows. Whenever this breaks, and this is a multi-cycle consolidation phase, make no mistake, and really even an accumulation phase, I would say, with the flat high there, right? You've got that flat top. I'll take away the fibs so it's not so annoying to look at. We'll bring them right back. But with the higher lows and the flat top, that shows accumulation. At least to me, that does. In a very long phase of accumulation. When this consolidation phase, this accumulation phase, whatever you want to call it, breaks, and I would assume that it breaks, if not by the end of this month. This month really could be, February, could be the month that we close above this area, above 69 cents, man. When we break above, I didn't even realize that, 69 cents, you break above that on a closing basis, and probably not even that. What would it need to be? I'm just drawing that for like the line of best fit. What interacted with this high here, what interacted with all those highs, right? And 69 cents isn't even actually the accurate number. It would probably be the highs, like the closing highs of the month. Yeah, look at that. That shelf, that's perfect. So that's all we're looking for. You're looking for a monthly close above, not even at new all-time highs, but at 53.049 cents or higher. Not at that price. You want it to be higher. So essentially above 53 cents. If we can get that this month, that would definitely indicate that March is going to be our breakout month. But even if we don't get it, even if this week or this month only closes green and we're right at this level again, I would think, being that we closed 1 month here and then rejected immediately, closed 1 month here and then rejected immediately, closed 1 month here and we consolidated and closed another month here, I would think that difference of behavior itself would be an inclination enough to believe that we're going to break out, right? So it's either that we're going to close this month above this line or we're going to close right at it again, and then next month we're going to break out. But whether the breakout starts now this month or it starts in March, it's going to finish in March. It's going to be carried on with the bulk of the move is coming in March. That's what I'm assuming, right? So understanding this pattern for what it is, it does seem like it's an ascending triangle to me, at least. From a high to a low, the minimum target from here would be all the way up at $2.46, which would be essentially a 7.4x move. And that's pretty intense. Don't get me wrong. From the low point in November to the high point here, we saw a very similar amount of growth in 1 month's time. A very, very similar amount of growth, okay? And this growth happened from your bear cycle lows, which is nice. Not your bear cycle lows, but the lows around there, right? This accumulation phase down here. This, in other words, was the accumulation phase off of your bear market trend, right? And this accumulation phase provided this move up with a lot of volume to the volume, of course, and the interest provided that as well. But when you broke out of this accumulation phase, that's the only point I'm trying to make. This was the move that corresponded. It might seem impossible. It might seem silly to consider a target that can move up about the same percentage when I don't know why it seems silly. We just did that exact same move. I get it. Higher market caps is harder to move. I get it. I understand all that stuff, right? But we just did it in 1 month. Why is it so silly? It's just calling for the same thing essentially. And that was from breaking this accumulation phase. Do you guys remember what I started the video talking about? I started it saying we are in a multi-cycle. I said consolidation, but I actually said it's more of like an accumulation phase because you've got higher lows, higher highs. So if we did this move, breaking this accumulation phase, what move are we going to do when we break this accumulation phase? Calling for the same kind of move doesn't seem so silly now, does it? I'm just saying, by the end of March, we really could see prices at $2.46. If not, and if you want to go the route of also, it's kind of a logical argument to go this route, I'll just say, if you want to go the route of, yes, this breakout move will be bigger than the last move. Of course it will whenever you break out of this larger consolidation phase, but also in turn, it will take longer to achieve because it was a longer breakout, and that's fair. But I would just say to that also as another counterpoint is that, yes, I would agree that, and I would actually very much agree that if we're talking about breaking out of this whole pattern, this is probably not a justifiable price at all. It would likely go higher, but it would take more time. But my thoughts are that immediate breakout move, that immediate snap, I think that will take us up something above $2. 246 seems to be the target right now. Let's see if we can make sense out of it through other means. So let's look at the weekly RSI or the weekly time frame now. On a weekly basis, beyond the accumulation phases on a long-term scale, we're in a consolidation phase, accumulation phase of our own right now. It looks like a bull flag, right? I've gone over this plenty of times, but this just validates, it reinforces the thoughts that we just had right from the low to the high of this flagpole to the base of the flag itself. This gives us the measure move, the expected target area for XLM to achieve by the end of its next move. Not by the end of the cycle, but just by the end of the next move, which I assume it to be achieved by the end of March. Here, that puts you at $1.90. And I want to offer the same perspective that I just offered, right? $1.90 is where you'd go. Okay, so that's below $2. I was talking about going above $2, so this doesn't necessarily help with that. But again, it is just a measure move. It's not a requirement. You could fall shy of that. Just because that measure moves there doesn't mean you have to go there. You could exceed it. Just because the measure moves there doesn't mean you have to stop. It's just an idea of what to expect. Something around here. And that's around $2. It's kind of close. 246, it's a little bit far away, but it's kind of close to that area. I want to offer the perspective that not only would we be breaking out of this bull flag, but again, we'd be breaking out of this overall range. If there was a time that a bull flag measure move were to be outdone, exceeded, I would think this would be an appropriate time for that personally. A multi-cycle, multi-year, almost a decade-long consolidation phase, you're going to break out of that in this next coming move? Yeah. I would think that that would be an exception to seeing a higher measure move or a higher target than your measure move. The measure move doesn't change. It's always the same. The measure move can't be higher. It is what it is. It's a technical analysis. It's a very fine rule. It has to be. That's why it works, right? Not always, but that's why it works over time. But I think it's feasible. It's logical. It's sound reasoning to believe or expect even higher prices are on the way than just $1.90. And what's that target area above $1.90 we were talking about? $2.46. If we use this fib here, now we're going by, so we've done it by the way of pattern recognition on a large scale, what makes sense from accumulation points on a relative scale versus a large scale, what the breakout might mean in comparison to what we've seen here. We've done the other chart comparisons or chart pattern analysis with the bull flag here. Now let's use the fibs. Let's use a high to a low here and determine, and of course we use the fibs here also with the all-time high to that cycle low. But this relative low, or this relative consolidation phase from a high to a low, we're looking for targets that line up with $2. Your first target zone is the 1272 to the 1618 always. Doesn't matter what time frame, what scale you're on. The 1272 and the 1618 is always your first target area. It's not always respected in very powerful moves. You actually do oftentimes enough, especially in smaller phases of consolidation, smaller fib ranges, you do tear right through your first zone. But it's something to consider anyways. Maybe we break out, we find some turbulence here, on our way up. That's fine, at these various levels. Maybe something like that happens ultimately on our path to this zone. And the reason why I'm thinking we do go to this zone is this is our secondary zone here at the 1886 to the 2618. The primary zone, the highest target is at $1.11. We haven't had anything that's anywhere near there. $1.84, right? $1.90. That was the closest to that. But $1.90 is already in the secondary zone, right? $1.90 was here to the 2272. So let's focus on the secondary zone because I think that's where we're going to go. Right? You know that you're gaining access to the secondary zone when you break above the golden ratio, the 1618 at $1.11. You break above that, undeniable at that point, you've gained access to the secondary zone. And at that point, I'd be pretty suspicious that we are in fact going to go above $2. The target that lines up the most with $2 is this 2272. This one so far, the 2618, that's at the high of the zone. That's also the highest target we've had of the video so far at $2.71.5. I don't know if I see that happening. It could happen, but I do want to tell you about the 2272 real quick. Okay, with the 2272, these look like little they look like little things, you know what I mean? Little sperms. I'm sorry guys. It's what it looked like. But moving up from here with the 2272, whenever you hit that, oftentimes you don't find resistance right at it. In fact, you do go just above it. I'm not saying that means you have to go to the 2618, right? You could go all the way up to $2.71, but I think there's more of a likelihood that you stop somewhere below there. There's other targets that suggest you go below there. And the 2272, while it is common to find resistance at it, even if you find resistance on a closing basis at it, it's very common to wick up. So I think something above $2 still, by ways of this fib retracement on the flag here, makes a lot of sense as long as you get above $1.11, which I think we're going to smoke $1.11, right? I think that makes that's absolutely clear. If we look at the weekly RSI here, looking at another perspective, finding higher lows and higher lows on this weekly RSI, we're right at the 50. We got the bounce last week. We had the weekly close green. That was beautiful. That's what we were looking for. You got it. Good job. Now continue. We want continuation. You don't want a bounce off the 50 and then to give it back, right? Just like here, if you reject off the 50 and then you give it back, well, that was really bullish. If you bounce off the 50 but then you give it back, that might be really bearish. You know what I mean? Here you kept rejecting the 50. If you were a bear, you wanted continuation, but you didn't get it. That should have been an obvious sign that something was coming. I don't think anybody, even if you knew something was coming, I don't think anybody expected this to happen. Maybe some insiders, maybe, but even then, man, that was unexpected entirely. But still, the expectation of something to the upside should have been there beforehand, right? This is very clear. You're finding resistance at areas that you should be rejecting down and going to your oversold zone from, but you're not. You're just building higher lows. You're in an ascending triangle of your own here. Of course, you're going to break out to the upside. So don't do that here. Don't do that here to the opposite effect. Don't find support and continue to find support at an area where it would make sense for you to go up, but then you start forming some kind of bearish pattern where you break down. Don't do that here. Just move up, get continuation, keep moving up, get above the 60, get into the overbought zone, and I think you will do that. I think in March we're going to do that, and that's what will confirm these bullish movement readings that we're expecting to come. So I hope it's clear as to what I expect. We're at 33.2 cents now. We could go a little bit lower. Let's talk about that first, and then we'll end the video. The expectations are that by the end of March, XLM is above $2. That prediction hasn't changed since over here. And I remember, you can go back and watch these videos from back here. I called the top on XLM pretty well. I did not call this move. I don't think anybody did, but I called the top pretty well. All right. And since then, even whenever I called the top, I've been saying we're going above $2. It doesn't stop here. We're going above $2. I will say that this consolidation phase lasted longer than I originally thought, but that's not a bad thing. If anything, it's more of a bullish thing. It's more time to accumulate and get your cards set up in the right way, right? But let's see. Daily aspect here, looking at the daily RSI. Lower highs, lower lows, kind of in a relative downtrend. I'm surprised. I'm actually surprised. You had a downtrend here, very pronounced downtrend. You broke out of it, and then you just formed another downtrend immediately. It's so crazy. But whatever. I mean, that's literally what you did in the price too. But if we look at this here, it makes me skeptical of saying that you're going to go higher immediately. But again, you rejected your 50. If you don't get continuation here, if you bounce off your 40, that would be a really good look and suggestive that you move higher. So here today, I suppose you could close the day red. You might even move down a little bit lower, but I'd like you to close around here and then bounce tomorrow or something like that. You could bounce today too, and that's fine. You don't need to close red. But if you close red, it's fine. You look at the 4 hour. The 4 hour is kind of suggestive that you go lower as well. What about the 1 hour? Yeah, the 1 hour. They're all suggestive that you go lower. Now, that doesn't mean you have to. In fact, if you're looking to buy XLM, my non-financial advice, my genuine opinion would be get in now. It's not worth the lower because the amount of lower is going to be insignificant to the upside that's coming anyways. If XLM interests you and you're thinking about buying some, you should get in now. Not financial advice, not a financial advisor, but I would just eat that loss happily because the thing is, this potential loss that I'm expecting based off the charts, it makes me think that you'll probably go down to about 32.3, maybe 32.2 cents, maybe at least down to about 32.8 cents, somewhere in there. That amount of loss, it's not worth waiting on, man, because it might come, it might drop down there, but XLM will see new all-time highs. It will go to prices around, if not above, $2 by the end of March. And you want to play the maybe game of trying to get that perfect low. Who cares, man? By the time it's at new all-time highs, you tell people you bought at 33 cents, people are going to be like, how did you know? You're so smart. How did you do that? You know, it's at $2 now. How did you know to buy it at 33 cents? Nobody's going to care. 33 cents. Oh, you're so much smarter. The 32.7 cents guy is so much smarter than you at 33.2 cents. Nobody's going to care. You know what I mean? And that's the whole point. You're not going to drop significant from here. I hope not. Famous last words, right? Famous last words, but I hope not. In fact, let's just do this real quick. Low to high. The absolute lowest I could see you going is 31 cents itself. You probably hold your ground here, but if you go lower, 32.5 cents, 32 cents itself is possible. I don't think you break below. I really don't think you break too much below 31 cents. If you do, we'll talk about it then. But I got nothing else for you guys. If you like the video, hit the like button. Subscribe if you want to see more content like this. We're looking for prices around, if not probably above, $2 by the end of March. We're looking for prices around, if not above, our all-time highs by the end of this month. The expectation, or the aspiration, I should say, is that this month, in the next 10 days and 22 hours, we get a price that closes above any monthly closing high, something above essentially 54 cents. If we can get 54 cents or higher, 53.75 is the price to beat. If we can get above there on a monthly closing basis, everything I've said is completely validated across the space. Even if we don't, it's still likely going to happen, but I'm just saying a monthly close, a new high monthly close, that validates a lot, man. It validates a lot, and I would love to see that. So that's your mission, man. You got to move up. You got to eat back this 19.5% that you're down, and you got to gain a whole 57% by the end of this month, man. That's what you got to do. You got to gain a whole 57 to 60% by the end of this month. 10 days, 22 hours left. I think that is a suitable task and a doable task for a coin of this magnitude. But time will tell. We'll see how it goes. And again, even if you're not there by the end of the month, even if you're just somewhere here, that's fine. If you continue moving lower by the end of the month, I might be a little bit concerned. But we'll go from there if that happens. Okay, hit the like button, subscribe. Thank you all for being here. I'll see you on the next one. Take care. Bye-bye.